Let me break this down the way I trade it step by step. The very first thing, I want to see a liquidity sweep. That's when price push above a recent high, just enough to take out stop losses and trap breakout traders. When that happens, I know smart money is in the game. Right after the sweep, I want to see a bullish fair value gap form, but this is where most people mess up. They try to buy it, I don't. This is a part of a trap. I'm waiting for price to break back down through that gap. That's when I start paying attention. If that fair value gap gets broken with a strong bearish candle, like an engulfing, even better. That's tell me where buyers are weak and sellers are stepping in heavy. And now, in this setup, you will see something I really love. We've got the E fair value gap perfectly lining up with a bearish fair value gap. That's kind of confluence. That's gold. That's where I want to strike. Now, here is the part most people skip. My entry rule. I don't chase price, ever. I place limit order at the retest of the E fair value gap and let the price come to me. If it taps me in, great. If not, I don't force it. There is always another setup coming. My stop goes just above the last high, clean and simple. And for take profit, it will be in the next liquidity zone below. No magic levels, no indicator, just logic and structure. This setup isn't random. It shows up every New York session, sometimes more than once, but some days it won't. And it's okay. The key is staying patient, let the setup come to you, and trust the rules. Here is another entry model I've seen work well. First, price sweep sell side liquidity right here, under a recent low. That's our signal that smart money may be stepping in. After the sweep, a bearish fair value gap forms, and price quickly break back through it. That flip turns a bearish fair value gap into an inverse fair value gap, a possible long entry zone. From here, traders enter long immediately using a market order. Stop loss goes just under the E fair value gap, and first take profit will be right here at the first structure high. Second take profit target the next liquidity zone above, where price is likely to get magnetized. Now, personally, I skip this setup. It doesn't align with my entry model or risk rules. I like more confirmation and structure before getting in. But I won't call it invalid. This is still a solid setup, especially for traders who like momentum based on long entry after liquidity grab. The important thing is sticking to what works for you and not just taking every move you see. Trading is personal. What is valid isn't always aligned. Now let's apply this strategy in real market condition. I will show you the exact time frame to use and the New York session interval where this setup become a high probability. Let's start by preparing the chart. I'm on the 5-minute time frame, and the first thing I do, I mark out the New York session range from 9:30 to 11:30. And next, I scan the 5-minute chart for liquidity zone, clean highs and lows where the market is likely to grab orders. Those areas often act like magnet for price, so I want them market before anything else. And now I switch to the 1-minute chart to get more precision. Now I just watch. I want to see which liquidity zone the market take first. And as you can see, price push down and sweep the liquidity below. That's our first sign. Now I will mark my first fair value gap and see how the market reacts. Price breaks through the first fair value gap, but I don't take the entry yet. Why? Because there is a rejection at the second fair value gap. And for me, that's a red flag. These small details, they matter. It's the kind of instinct you build through backtesting. You start to recognize what looks clean and what's feel forced. It's not about being first in the trade, it's about being right. So I wait, I want full confirmation before I risk my capital. That simple habit has saved me from a lot of bad trades. And now, the very next candle breaks straight through the second fair value gap, clean and with momentum. That's the confirmation I was waiting for. Now I have enough confidence to trust the setup. Everything line up, so I'm ready to take the trade. I enter on the retest of that second E fair value gap using a limit order, no chasing. My take profit is set at the last 5-minute liquidity zone above. For the stop loss, I placed it just below this level because price could easily come back and retest the first E fair value gap before moving to the target. And I'm okay with that. It's clean setup and the risk it's still well controlled. So you can see how price come right back to retest that second E fair value gap. No rush, no panic, and then make a clear move straight to our target. That's exactly what we planned. Simple, clear, and effective. Alright, let's jump to the next day and see if we can find another clean setup. Just like always, we start on the 5-minute chart, and first thing I do is mark out the New York session interval from 9:30 to 11:30. And now I'm marking my key levels, the liquidity zone that price may target right after the market open. Those are the areas I want to keep an eye on before dropping to a lower time frame. Now we move to the 1-minute time frame and let's run the chart to see where the market wants to go. As you can see, price grabbed two liquidity levels, then forms a bullish fair value gap. That's our signal to slow down and watch. Now we wait for price to break through that fair value gap to get our confirmation before we get in. As you can see, we get another candle that confirms the break of the fair value gap. So this looked like a solid opportunity to enter a short. I place a limit order on the retest of the E fair value gap with my stop loss just above the zone and my take profit set at the last liquidity area below. Let's run the chart and see how the market reacts to our setup. Now it's all about patience. Let's see the price respect the levels and give us the move we are looking for. We hit our target just like we planned. It's the same clean setup as the day before. But like I always say, not every day is perfect. Some sessions are choppy and the market won't always respect the setup. That's why good risk management is everything. It keeps you safe even when the setup doesn't work. So let's quickly recap the process. First, we start on the 5-minute chart and mark our key liquidity levels. Make sure your setup happened during the New York session between 9:30 and 11:30. Then you wait for a clear liquidity sweep. Once that happens, look for a confirmed E fair value gap. That's your signal. From there, you've got two options. If your risk management plan allow it, you can enter right after the confirmation. But I always recommend placing a limit order at the retest of the E fair value gap. It's cleaner and less risk. And most important, if the trade doesn't check every box in your list, don't take it. Be patient. There is more than one setup every day. Stick to your rules and you will see how well this strategy can work. After this video, I want you to go backtest this strategy and drop a comment to let me know how it played for you. Let's build discipline and consistency, one setup at a time. I hope you enjoyed the video. If you find value in it, don't forget to subscribe. I drop a new video every week, breaking down real strategy and setup just like this one. See you in the next video.